Welcome, accounting boffins. You are with Ashraf Patel and the crew. Today, we're looking at cash budgets. However, we're looking at a particular question as it applies to a cash budget. So, let's just go quickly and see what we have. Remember what we've done before. In budgets, you have your receipts and your payments, right? So, what do you remember? When you're doing budgets, you think cash. All the cash that we are receiving and all the cash that we are paying out. Okay. Then, when it comes to your projected income statement, obviously, there you're looking at what you're looking at your projected income statement. You're looking at incomes that you have earned as compared to expenses that you have incurred. Okay, look at the terminology that we're using there so you know exactly what it refers to. Right, our question here says, information. The information provided relates to live wire traders owned by Debbie Prince. The business specializes in electrical products. Their financial year ends on the 31st of December 2020. Right, that's the information that you have. Okay, now the question says, indicate whether each of the following statements, whether they are true or false, right? The first question says, the balance on the cash budget represents profit earned. Right, what did we just say early on in the lesson? We said that a cash budget, you think cash, you think receipts and payments. Now, this statement says the balance on the cash budget, right? So we're talking about the cash budget, but it says represents the profit that we have earned. Clearly you can see that this is false. Reason, the cash budget would give you the balance of your bank account. That means it would give you the balance of your receipts and payments and therefore not the profit that you have earned. If you wanted to work out the profit that you have earned, that would come from your statement of income and expenditure, your projected income and expenditure. Okay. The next one says, all projected receipts and payments are recorded in the cash budget. Right, let's analyze the statement one more time. All projected, right? So definitely we're working with a projection, we're forecasting. Receipts and payments immediately should give you an indication. Are we talking about the projected income statement or are we talking about the cash budget? It says here, recorded in the cash budget. Clearly you can see that that is true. Why? Your statement of receipts and payments is reflected in your cash budget. Okay, so it's important for you to understand that these theory types of questions, you need to understand what are they asking you for. So you must understand what the concept is and then obviously say whether it is true or false. The next one says, again we're talking about whether the statement is true or false. Profit on sale of asset will increase the balance on the cash budget. Okay, think carefully. When you're disposing of an asset, right, you've got the selling price, you've got the cost price, you've got the depreciation, you've got the accumulated depreciation, all those components that we generally calculate when we're working out the asset disposal. The question here says, the profit on sale of asset, that one, they're talking specifically about the profit, not the selling price, will increase the balance on the cash budget. And obviously, you now need to ask yourself, the profit on sale of asset, is it my receipt? And the answer is an emphatic no. Why? Because the selling price is what we record in our cash budget. But the profit that you have made on the disposal of an asset is recorded in my statement, in my projected income statement. So clearly you can see here that in this question here, this statement is actually false. Why? Because the profit on sale of asset is recorded in my statement of comprehensive income, also known as my income statement, whereas the actual selling price of the asset is recorded in my cash budget. Okay, clear? Got that? Brilliant. Let's move on. 17,000 Rand, again we're busy with a statement whether it is true or false. 17,000 Rand received for selling equipment must appear in the projected income statement as an operating income. All right, watch this question now. 17,000 Rand that you have received, right? For what? For selling old equipment must appear in the projected income statement. Clearly you can see now. We're talking about the monies that we have received, but the statement says it must be recorded in my projected income statement. Clearly you can see the statement is false. Why is it false? You give me the answer. Very simple. The amount that you've received on the disposal of the equipment goes to my cash budget. Remember the previous question? Yes, if this had said 17,000 Rand must appear in my cash budget, then definitely it would be true. But because it's saying it must appear in my as an operating income, absolutely incorrect. So the statement is false. How would we correct it? We would say that the profit made on the disposal of an asset will appear as an income in my projected income statement. Okay, so clarify it once again. This one here is the selling price of 17,000, and this needs to be recorded in my cash budget. Therefore, this statement is false. Okay, we're now looking at a cash budget, and the question says, identify an incorrect entry in the cash budget and explain why it is incorrect. Okay, let's look at the information that we have. There's my cash budget. Let's go through all of these items so that we have a clear understanding of whether they belong there or not. Let's start off by saying advertising. Certainly an expense, so it will go into my cash budget. Telephone, another expense, will definitely go into my cash budget. Vehicle expenses, yes, will definitely go into my cash budget. Rent expense, land and buildings, obviously if I'm buying land and buildings, the purchase of the land and buildings will be recorded in my cash budget. Municipal rates, yes, definitely. Depreciation, let's talk about it. What is depreciation? Depreciation, as we have alluded in previous lessons, is what we refer to as an imputed expense. Let me explain. What do we mean by an imputed expense? It is an expense that does not affect the flow of funds. I repeat, it is an expense that does not impact on the flow of funds. In other words, there's no money leaving our business when we are recording depreciation. Therefore, you can clearly see that depreciation should not appear in my cash budget. Yes, interest on loan, equipment, drawings, if the owner is taking cash, would appear. So all of these items, this one here, depreciation, is the one that does not appear in my cash budget. And the reason, we've made it very clear to you, is that it is an imputed expense. It's an expense that does not affect the flow of funds and therefore does not feature in my cash budget. Okay. So there we go. We explained it, that it is depreciation and the reason why it is a non-cash item. Okay. While we're at it, can you think of another non-cash item that would not appear in your cash budget? Let's take an example. If you look at bad debts. Remember, when you have bad debts, yes, this is an expense to the business. We all know that. The account is written off as irrecoverable. However, it's no money, it doesn't affect our bank balance because there's no money leaving the business. There are other cash items that you can think of, discount received, discount allowed, think of those items. Okay. Now we come to a question that says, state 3 ways in which land and buildings can be financed. If we look at our information here, you can clearly see that we need to purchase land and buildings, right? Now, how would you finance the land and buildings? Again, look at the nature of the question. They want to elicit a response from you, asking you, how would you finance the land and buildings? Okay? Let's look at the ways in which the land and buildings can be financed. 1, there's an additional loan of 400,000 Rand. Okay? Based on your given information, obviously, you'll have to look for that information and find out that there's an additional loan that was taken to the value of 400,000 Rand. And therefore, you can see that as you have taken that loan will allow you to finance the land and buildings, right? 2, a fixed deposit has matured. Obviously, we know what the fixed deposit. Let's look at the 2 possibilities. 1, a fixed deposit that we make. That means we take money out of our bank account and put it into a fixed deposit is regarded as a payment. Why? The money is taken out of my bank account and put it into a fixed deposit, thereby leaving our bank account. Therefore, that is regarded as a payment and will appear under the payment section of my cash budget. However, when a fixed deposit matures, you have money flowing into our bank account, okay? And obviously, that would then appear as a receipt. Why? The fixed deposit has now matured. The money is coming back into our bank account, so it's an inflow of cash, and therefore, that will be shown as a receipt. And then clearly, you look at your bank balance at the end of your budget period, and in this case here, there was a closing balance of 550,000 Rand, meaning that after you have subtracted your receipts minus your payments, right, you had a surplus of cash to the value of 550,000 Rand, and as a result of that, you can clearly see that you can use that cash that you have as a surplus to finance your land and buildings. So, what is important, accounting learners out there, is to look at the information, look at the context of the question, and based on that context, you will then have to answer the questions based on the questions that are given to you. Okay, so what have we done? Clearly you can see, and this was very, very evident in what we have done in this segment of our lesson. The question focused on the cash budget and the projected income statement. In other words, you had to clearly identify, although the question was asked in the form of true and false, you had to identify the item, whether it would appear in my cash budget or whether it would appear in my projected income statement. So clearly, if we have to summarize, cash budget, you think cash, you think actual receipts and actual payments, whereas your projected income statement, you look at incomes that you have earned and expenses that you have incurred. Before we conclude, let's just take one example so that we know for sure we understand the difference between the two. Let's take the question of a fixed deposit that you have made, okay? So you've invested money into your fixed deposit, an amount of 500,000 Rand. Obviously, that will go into your cash budget as a payment because it's money leaving your bank account. However, the interest that you have received, on the fixed deposit will also go into my cash budget as a receipt. But the interest that you have earned If there's a difference between the two, the interest that you have earned will go into your projected income statement. That means the entire amount. So if we illustrate and we say there was interest that was earned to the value of 10,000 Rand, so the 10,000 Rand will go into my projected income statement. And if we're looking at the interest that we have received, if we've received 5,000 of that amount, 5,000 Rand will go into my cash budget as a receipt. So clearly you can see the difference between receipts and payments, incomes that we have earned, and expenses that we have incurred. Let's take a quick break, and as soon as we're ready, we'll be back with you with cash budgets. See you just now.